What is up, YouTube? My name is Jordan Brown. For the longest time, I've been wanting to make a YouTube channel about personal finance and investing, and I keep putting it off, so now I'm finally sitting down and making myself do it. So, a little bit about me. Like I said, my name is Jordan Brown. I'm 28 years old. I'm super passionate in anything when it comes to money, so investing, real estate, stocks. So my goal with my channel here is to help you guys figure out ways to save money, to invest money, and how to grow it. So a little over a year ago, I purchased my business, which is a self-storage facility. We have 106 self-storage units, 46 RV boat storage spaces. I have 2 commercial buildings as well that I rent out, and a duplex on the property. So for me, I'm very, very passionate in real estate, especially when it comes to just creating more cash flow and passive income, and especially an asset that you have tenants pay down for you, just to help grow your net worth and build some equity. So my goal with the channel is to help you guys learn tricks on how to save more, whether that's into building your own business, saving for your retirement with Roth IRAs and your 401ks, health savings accounts, anything that can help you be more diversified and also grow your net worth. So a few things that I believe are crucial when it comes to saving money and building your wealth is you have to have a plan, and especially having a budget in place. You have to know what's coming in, what's going out, and what you're spending money on kind of on a daily basis, where there's little things that you don't even think about. So for me, a book I really love is The Automatic Millionaire by David Bach. Highly recommend it. And what he talks about is the latte factor. So a lot of people, you get your coffee every single day, where that could be $5, or if you're getting multiple coffees a day, $10. Or whether it's not coffee, or if you're eating out, buying clothes, whatever it may be that you kind of just like to spend money on, sometimes you don't really realize how much money that is and how much it's adding up. So by creating that budget and kind of being more aware of where you're spending that money and where you can cut back a little bit and save and invest that money to let it grow, is crucial to building your wealth. Rule number 2, when it comes to building your wealth and becoming financially independent, financially free, is you have to pay yourself first. A lot of times, in everyday life, when you have bills coming up, you're so stressed about paying your next bill, but in the long run, you have to set something aside, whether that's just a little bit each month. Every time I get paid, automatically what I do is I put a percentage away. And that's crucial, especially when you're younger, to let that grow as you get older. So a great way to do that, and just to automatically save more, I love the app Acorns or Stash. So for me, what I do is I just link my debit or different cards that I have, and it just rounds up your change to the next dollar. So if you go and get some groceries and you spend $37.40, it's going to round up that next 60 cents for you. And it just builds up with every time you go out and spend money, and then withdraws $5 here, $6 there. So I think it's a fantastic way to save money without even realizing it. So for me, on average, it's about $100 a month just for my change that I get to save, which if I turn around and invest that into my Roth IRA, which I'm currently doing, that's going to compound over the years and grow substantially. And for those of you who don't know what a Roth IRA is, basically it's an individual retirement account where you pay taxes on money going into your account, but then all future growth is tax-free. So as you let it grow over 20, 30, 40 years, all that interest that you've gained, you don't have to pay taxes on. So I highly recommend opening a Roth IRA and start investing immediately. So one thing I love to do is I go to investor.gov, or you can just go to Google and type in a compound interest calculator, where you can see if I'm investing X amount of dollars for this amount of time, how much money is that going to grow to? So let's just say initial investment is $100, and then right now on average with my Acorns account. It's about $100 a month that's being saved, and then I transfer that into my Roth IRA every couple months. So let's say monthly contributions is $100. Length of time in years, I'm 28 years old, so in 65, that would be 37 years to grow. Estimated interest rate. On average, the stock market has produced an 8% return over the last 100 years. So let's just say 8% with a 1% rate of variance. So we'll just go to calculate. So right here it shows that just by investing $100, basically just my change, when I'm 65 years old at an 8% return, I should have $245,000. And if you want to be more conservative with the 7% return, $193,000 just from saving my change, which is absolutely phenomenal. Let's say you're younger. Let's say you're 20 years old. So now you have 45 years to invest. And instead of $245,000, now that's growing to almost $467,000 just from investing your change. That's the beauty of compound interest, is the earlier you start, the greater it grows. So no matter how old you are, whether you're 20, 30, 40 years old, 50 years old, it's so important just to start and let the compound interest start growing for you. After you pay yourself first, the next thing you have to do is you have to eliminate debt. You have to get rid of those monthly expenses that you're paying someone else every single month, to where now you have that money where you can invest that money for yourself, and instead of paying interest to someone else, now you're gaining interest through your investments. And if you guys need help on learning how to pay down your debt and eliminating those expenses, I highly recommend listening to Dave Ramsey or Chris Hogan podcast, or reading the book, The Total Money Makeover. Dave Ramsey does a fantastic job with helping the everyday average person creating a budget and eliminating their debt. So I'm sure a lot of you have heard of the debt snowball, where you basically pay your lowest debt payment first and pay minimums on everything else, and then after that you take that next lowest payment once you've paid it off and add it to the next one. So that snowball effect is the ball rolling down a hill. It's going to get bigger and bigger as you pay off more debt. You can throw more money at your debt payments. So guys, this YouTube channel has been a long time coming for me, so thanks for the support. Like, subscribe, and let me know in the comments below what type of topics you want me to talk about, whether that's personal finance and budgeting, investing in real estate from residential, commercial, or self-storage, or how to invest in stocks and how to pick certain companies that are going to be a good long-term investment for you. So keep hustling out there and keep growing.